Well, welcome, Simon. Welcome, Gunnar. And welcome to all of the audience. And I'm going to give them a few more minutes to come in. So for those of you who are already here, please feel free to like, subscribe, and share it with your friends. Tonight, we have two very special guests. We have a returning guest, Gunnar. You came on exactly 4 weeks ago. And we have Simon dialing in from Hong Kong. Is that right, Simon?
I used to live in Hong Kong, but this is the Isle of Man behind me.
Oh, nice.
It's a really nice view.
Yeah, very nice. Well, welcome. So I'm dialing in from Kuala Lumpur, and Gunnar's in KL. Fantastic. Yeah. Okay, so for those of us who are just rolling in and joining us now, feel free to share, like, subscribe. Please tag your friends if they're interested in this topic. Tonight's going to be it's going to be a very special episode. Feel free to have any questions. Welcome to Alex. Welcome, Alicia. Hello, Irene. Hi, Muhammad Saiful. Hi, Harith. Hi, Em. So it's actually a public holiday in Malaysia today.
It is,
but,
yeah.
Yeah, but as they say, no rest for the wicked, eh?
Yeah,
it's been a long time since I've been in Malaysia. So last time I went, I think was several years back. So.
Wow. What did you think?
Yeah, and on our side, our offices, Hong Kong, are busy at work as well. So it doesn't feel like holiday.
Well, when you're in crypto, it never does it? It's just kind of
it never sleeps.
Never sleeps. Okay, well, welcome. Okay, so look, those who are joining us, feel free to throw in any questions. And so tonight we have a very special episode. We've got Simon, we've got Gunnar, and we're going to talk about something that's it's an interesting topic. It's a very interesting topic, and I'll probably start it off by sharing my slide as I always do. Let me just share that quickly. Here it is. Okay. Present that. By the way, for those of you who do use Google, did you notice that there were some issues with the Google platform today? There was, I think they're still trying to fix it. Anyway, okay, so tonight it's going to be a very, very interesting topic. As usual, just a disclaimer, this is only for informational purpose. This is not financial advice. If you are going to make any financial decision, please check in with your financial advisor. Okay, so anything discussed tonight is we're just having a chat, and it's only for informational purposes. So just to get, just to start it off and kick off the topic, right? Let's just I've just got a few slides to share, right? And then we'll go on. So, only 3 years ago, Jamie Dimon says that, called Bitcoin a fraud. But then, fast forward to today, JP Morgan is now the bank to some of the larger, crypto players, right? So you've got Coinbase, and then you have Gemini, that's owned by the Winklevoss brothers. They say that the millennials now, they're yet to be in their prime earning years. So but if you look at the top 5 so equity holdings, right, of assets held, they actually hold the millennials actually hold Grayscale, right? 1.84%, right, of them hold Grayscale. And then I want to just quickly pivot your attention to, so we talk about M2 money supply. So M2 money supply, every country has different definitions of what M2 money supply, but essentially it just means how much money is in the system, right? And so if you look at the growth of money supply in Malaysia, the compounded annual growth rate of that from 1974 to 2020 has been 12.56%. So that's quite a lot of growth, right? And which means every year, right, essentially another 12.56% of money gets added to the pool, right? And then the next year, once it's grown bigger, another 12.56% gets added to the pool. So it gets more and more and more. So essentially, your money that you're holding gets devalued, right, over time. Now, this is interesting because according to the in Malaysia, the central bank's called Bank Negara. According to the Bank Negara stats, at least 50% of all money is actually held in fixed term deposits. So Malaysians love to save. In Singapore, our neighbor, their M2 growth has been slightly less, but nonetheless, it's two-digit, right? It's at 10.72%. Now, obviously, everyone's talking about how the Federal Reserve in America has actually been printing a lot of money. So if you the next slide is just going to show. So we just look at 1974 to December of 2019, right? Surprisingly, the money, supply growth, M2 hasn't been, well, compared to Malaysia and Singapore, hasn't been that much. But then I'm going to focus in on that little bit there that's not in blue, right? That bit there, so that's from end of December 2019 to June this year. That's been a 20% growth, right? So that's when the Fed Reserve decided to do some unlimited quantitative easing, unlimited QE. So I'm gonna end the slides. I think, yeah. So I've probably got 2 more slides, and then I'll hand it over to Gunnar and Simon. So essentially, why is Bitcoin important? When you have a lot of money, look, Simon's probably a lot better at this than I am. So I'm gonna get Simon to explain this. But essentially, look, I think if you can see this clearly, right? Just look at the inflation rates of some of the countries out there, right? And I know the latest one that I've been hearing a lot about in the news is Turkey, where their overnight rates have been increased quite significantly. And I think they've also started to charge for withdrawals from the bank to prevent bank runs. So actually, I'll probably not talk so much. I'll let Simon do some of that. And then, look, what if digital assets took over, right? So, the question about, it's if you look at the trajectory of growth, and so the green line is the number of internet users, right, over the last 24 years. And obviously with crypto, we're only, for Bitcoin, we're only into 11 years, right? So you kind of see that trajectory. So what if, that trajectory of growth follows that, right? So, okay, so I'm done with my slides. I'm gonna stop sharing, and probably should have done this earlier, but I'll let Simon. Could you please introduce yourself, and then I'll let Gunnar introduce yourselves, and then let's kick off this discussion.
Sure. Okay. Well, thank you very much for having me. I've spent the last 20 years studying money, and it started with economics, and then I got a career in investment banking. I worked in stockbroking, then market making on the trading floor, and then corporate finance doing IPOs. I decided in 2006 to leave corporate and give lectures on the unsustainable nature of banking. And no one was interested until 2007 came along, and then suddenly a lot of people would attend my lectures. So I wrote a book called Bank to the Future, Protect Your Future Before Governments Go Bust. That was actually the first published book in the world to include Bitcoin. It was written in 2010. And to launch that book, I spoke at the very first Bitcoin conference in the world in Prague, and been investing in the industry since. I tried to create a non-fractional reserve bank so we can dig a bit deeper into those things and M2, but I ended up pivoting it to actually work on the securities side. And so we started investing and giving investment opportunities through a company I co-founded, BnkToTheFuture.com, to invest in many of the companies that make up the crypto industry today, whether that be Kraken, Bitstamp, Bitfinex, Coinbase, Blockchain.com, many of the household names. We've invested in them. We did many of their early funding rounds. And now, yeah, just a full-time investor in this industry. And it's got to the point where it was just 20 people in a room and you could you could follow everything, to the point where now I just can't even keep up. You know, every day new things are happening. And my full-time job is to understand what's happening in this industry, and I just can't keep up anymore.
Yeah, that's so true. My guest on last week, he was just telling me that Dino, he woke up one morning and there was this thing called Yam, and and it had, by then the market cap was already, I don't know how much that, but it's true. Like you know, every night you go to bed, and the next morning when you wake up, something new's been invented.
Yeah, certainly. There's, you know, it's just gone from strength to strength as an industry. It's always entertaining, but there's always been this consistency with Bitcoin. So it's great to see all the things around the edge. But what I think the real important thing that comes out of this industry is still the first thing that came out of this industry, which is Bitcoin. And you talked about some of those charts there, and that really leads to an important conversation about why Bitcoin is a lot more important than just a way of making money for some people in the West.
Yep. Cool. Thanks for that introduction, Simon. Gunnar, I'm going to let you introduce yourself, please.
Sure. So I'll just do it really quick. As you mentioned, I was on a few weeks ago, so we might have some of the repeat viewers. But for anybody that's new, my name is Gunnar. I'm the CEO of First Digital Trust, which is a spin-off from Legacy Trust Company. And long story short, Legacy Trust is a very traditional trust company that got into the digital asset crypto space not quite early, but a few years ago. And we have made quite a name for ourselves. We built up a business which we spun off into a separate trust company called First Digital Trust, which is mainly focusing on fintech companies. We're focusing on you know, a lot of digital asset businesses, DeFi businesses more and more these days, and tokenization and all of that. That's pretty much what we do. So I won't take up too much time on the introduction.
Cool. Thank you, Gunnar. So, were there any slides? Did anybody want to share any slides?
I do have some slides. I'm not sure. Let's see. Can you guys see my slides? It's just some bullet points that
Sure.
from our recent announcement. I think that might give some idea for people, sort of the common link between two of our companies and why both of us, Simon and myself, are on this live stream together.
Yeah. Okay, so I think the slides are on, Gunnar.
That's good. Yeah. So maybe I'll just really quickly talk about this, and I'll let Simon to sort of build on top of that. And you know, previously you talked about crypto, you talked about banking and the whole industry itself. So we have known Bank2The for quite a while now, and I think there's a common theme there, which we both share, which is that I think that both companies believe that there's something that needs to change in the world of finance in the future. And maybe crypto is only one part of it, but the world has been operating on the fractional reserve banking model for quite a long time. And from our perspective as a trust company, it's very different. You see, for us as a trust company, when we hold clients' money, we cannot lend it out. We cannot do whatever we want with this, like many traditional banks can. And the reason they can do that is because they have essentially central government support, and there are central banks that give them leverage, and the banks need to maintain the reserves. But trust companies are very different from that and from the banks, in a sense that when somebody puts assets into a trust, or they put money into a trust account or fiduciary relationship, essentially what's happening there is we're holding those funds as a fiduciary. And this is very similar to how money used to be. So, some people might say, oh, this is like old-fashioned concept. But when we switch to this, new form of money, which is fractional reserve banking, essentially, things changed quite a lot, but the trusts stayed the same. And we have seen different, financial crises, all of these things come along, but trusts have been around for a few hundred years already. The model is very proven. We don't pledge, or we don't use our client money in any way like the banks do, and hence it reduces the risk for the end client, or for the end user, actually. So it's a very traditional way of doing things, and what we are trying to do on our side is we're trying to sort of take it to the modern world, to the 21st century. There is a blockchain component there, which really plays really well with the whole trust aspect. But we're a huge believer in this more traditional way of holding people's assets, and also managing people's assets, where everything is fully collateralized, and you have clients' explicit consent in terms of when you need to when client instructs you to make investments, and all of these things. So that's the synergy. And what we're trying to do with First Digital is we're trying to take it to the 21st century. We're trying to innovate on top of that. And blockchain-based cryptocurrencies, tokens issued on blockchain are perfect for that, because they take away that central bank component from the middle, essentially. And that's how we see it, and that's why we are really huge believers in this new technology.
Cool. So Gunnar, let's take it a step back, right? So let's start with. So I mean, I know there may be some repeat viewers out there, but there's probably some new viewers as well. So I'm gonna ask the most basic of questions, right?
Sure.
Let's start with what is a trust, right? And then Simon, I'll move on back to you with another question that Alexander asked. But let's start with that, Gunnar. So let's explain to the viewers what a trust is as compared to a bank, for example.
That's a very loaded question.
Okay. What's a trust?
Basically, a trust is basically a relationship. So to create a valid trust, you need a settler, essentially a person that creates the trust. You need a trustee, and you need a clearly defined set of beneficiaries. So that's the three components that you need for a trust. And that's a very traditional trust arrangement. And trust takes different forms, like custodial relationships are a form of a trust, or what we call fiduciary relationship. The same goes for escrow, where somebody is holding assets for somebody else's benefit. So these are all form of fiduciary relationship. But what trust essentially means is there is a professional entity, very much like banks are holding money for people and doing investments. Trustees are holding assets for people. And I guess I'll save the story of the knights and medieval UK this time, but it goes way back, and it's a well-established concept in the common law. But it's nothing else than just somebody holding assets for somebody else, and under a clearly defined set of rules and clearly defined set of terms and wishes, essentially.
Okay. I have a question here from Alexander, which I'm going to put up on the screen. And this is probably for Simon. What is a non-fractional reserve? Well, what is non-fractional reserve banking?
Okay, so taking a step back, I think to frame this is that I think it's very important for people to understand what the relationship is between you and your bank. So when you deposit your money at a bank, the bank is actually the legal owner of that money. So we've all heard of things like bail-ins in Cyprus is the most commonly used example. The reason that banks can bail in is because when you deposit, it is legally theirs. They promise to give it back to you, and they give you an account that makes you think it's yours, but really it is theirs. And this is where the trust relationship comes in. It's about legal entitlement to those assets. The second thing, when you deposit your money at a bank, not only do they become the legal owner, but they can actually spend it as they choose. And that's why banking is so heavily regulated. Because they can actually redirect the flow of money. And the way that they do that is through issuing loans. And so they might take some of your deposit and use it as collateral. But when we actually first studied this, we realized that even fractional reserve banking is a very misleading term. I'll go into that because the fractions and the reserves are actually, you can move them away. But essentially, the money can be spent. The reason I'm into Bitcoin is because it's money that you can own and money you can spend without censorship. But the final part is where the fractional reserve comes in. And many people talk about Bitcoin being the first digital currency. In fact, the banks invented digital currency. They were given special privileges whereby they could create a digital representation of what the people think governments create. So the dollar is, people think it's created by the Federal Reserve or the mint or whatever it may be, but most of it is actually digital, and it is digital representation of the government's currency. So if you log into your online banking, if you have a positive balance, that is a digital currency. You can convert it for the government's currency, which is cash and coins, by going to an ATM. But it's actually a digital currency. Now, how is that created? Well, every time you issue the bank issues a loan, they just create new digital currencies. So this digital currency called the dollar, the yen, and all these different currencies, they're actually backed by people's debt. So if you have a positive balance in your online banking, somebody else has a negative balance, which is actually the definition because there's not actually enough money to pay off all this debt. It is actually the world's largest regulated Ponzi scheme, and that's what fiat money is. And so it's created by debt. You don't own it when you deposit it. You can't. The bank can spend it, and they can create it every time they issue a loan. Bitcoin is the opposite of that, and a trust structure tries to take away some of those through legal structures, whereby the money is segregated. So fractional reserve banking is actually something that is taught in economics. It's a bit misleading because it teaches you that a bank, if they're allowed to create new money every time they issue a loan, and they are allowed to use your deposit as collateral, and then they're allowed to lend that out and dictate the flow of money, then what stops them doing it in unlimited supply? Well, they call it this thing called fractional reserve banking, which states that they need to hold some of their money on reserve, and then they can multiply it every time they issue a loan, and then it recirculates. And in economics, they call this thing a multiplier effect. But every school of economics has showed that the multiplier effect doesn't actually exist. And you can use an investment bank in order to actually get around any reserve requirements. So you can just put assets into an investment bank rather than a retail bank. And then the definition of what you need to hold on reserve changed over time, from gold to cash to actually being assets. And those assets were created as debt as well. And so therefore the reserve doesn't exist either. And so we've had over the decades, loads and loads and loads of financial engineering to increase the level of debt to create the illusion of growth in the world's largest regulated Ponzi scheme called fiat money. That brings us to where we are today. So fractional reserve banking, what is non-fractional reserve banking? Well, it's in fact a trust. And so when we wanted to actually create a non-fractional reserve bank, we went to the regulator. We were trying to do it in the UK, and we said, look, we don't want to borrow, we don't want to own clients' money. We want the money to be theirs. We don't want to spend it for them. We want them to be able to dictate the flow of money. And we don't want to make more deposits than actually exist. And they said, well, it's not a bank. You can't create a bank. There is no such thing as a non-fractional reserve bank. And that's when we discovered Bitcoin, because Bitcoin created that through math and code. And so instead, we started focusing on that. But the trust relationship is the old relationship legal structure whereby you have to say what you want to do with those assets. You legally segregate those assets from the risk-taking part of a bank. And they can't be recollateralized and rehypothecated in order to create more digital currency than the assets exist.
Cool. So Simon, as I understand it, so BnkToTheFuture is now working with First Digital Trust to hold all the assets that BnkToTheFuture or for BnkToTheFuture's clients. Is that?
Yeah, so we're working on a new product. So at BnkToTheFuture, we spent the last 10 years, we're celebrating 10 years as the world's first crypto securities business and the longest standing business in Bitcoin. We've been focusing on securities, getting all these companies funded that made our industry. We specialize in the equity side. But we've always, because securities are so tightly regulated, we had to put together global structures to comply with US securities laws, UK securities laws. We're registered as a Cayman Island monetary authority. And so we have all these different regulatory global structures we have to put together in order to be able to offer securities globally so people can invest in the equity of earlier stage companies in the financial technology space. But now we want to build a product for the masses and actually start to return to that original vision, which we tried to achieve of, how can you actually start to provide what services look like banking, but without, the services of banking. So one of our first moves is we're actually launching a Bitcoin-centered retirement plan product. But in doing that, we want to make sure that our clients' funds are actually not fully protected from bank bail-ins, but have the legal structure to actually have additional protections. And so the trust structure is the structure that we need to partner in order to make this product actually happen. Now we want to specialize in what we're doing, and First Digital can continue specializing in what they do. But the trust structure is the relationship that we wanted. And so now we're looking at how we can actually hold our client assets through a trust structure rather than actually doing it in the traditional banking relationship. And that brings us to where we are today, really.
That's really interesting. So essentially, when you first started in the UK, you wanted to create a bank, but without the fractional reserve side. But then they wouldn't let you because there was no such thing. And so now I suppose you're getting to a point where you're able to somewhat achieve your dream, where you are able to provide banking services, but without that fractional reserve risks, as you mentioned. Is that right?
The thing that's changed today is that we've now funded over 100 different companies in the industry, and the innovation has grown so much that now the technology all exists to actually achieve what a non-fractional reserve bank would have originally achieved. Now you can do it outside of the financial system. So I don't want to go too geeky into this, but since Bitcoin came around, we've now got all sorts of financial products. We've got digital representation, stable coins, decentralized financial products. Every single financial product that exists in the traditional financial sector is now being rebuilt outside of the traditional financial system. We've finally reached a stage where you can plug this together and you can actually achieve the same result as if you were to create a non-fractional reserve bank in the traditional financial system. and not even need to be a bank, and do it all through technology. So that's what I'm really excited about for the next decade ahead. And I think we're going to see, like, if people think that the crypto markets has like reached a stage right now, I think the industry is just getting started. The last decade was all foundational. The next decade is where we actually build financial products for the world. And we're still a micro, tiny little niche. So for me, I see really, really great growth potential in this industry. I'll be looking to continue to invest into what I think is the growth of this sector.
That's fantastic. I've actually got a few questions. So this is generating pretty good conversation. So I'm going to flash one of the questions up here. So hi, Simon. What do you think of the Ampleforth, which is an elastic supply currency, but non-dilutive for token holders and daily rebasing, mimicking the Fed? Do you have any comment on that?
Yeah, so Bitcoin, I believe, is our world's best shot at ever achieving sound money. Once you go down that rabbit hole, you start to realize that there's all sorts of things that are infinitely more riskier and experimentation. The challenge with this is that there's so many different projects and so many different things. So I met the Ampleforth team when I was last in San Francisco before this lockdown. And they're a bunch of money geeks, essentially, that have put together a great community of people experimenting with new forms of money. But don't confuse that, because once you've figured out the Bitcoin side of this industry, you can then take a portion of your Bitcoin and start to look at these infinitely more riskier, crazy projects, and get a bit more speculative if you want. But the problem is with me talking about projects like this is if someone goes straight to there thinking that this might be the next Bitcoin killer or something like that, you tend to drive people into these crazy gambling behaviors and crazy parts of the industry. So I tend not to comment on these individual projects. They're interesting. There's thousands of them. It's a rabbit hole that you can go down. And I think most people should just start with getting their head around the concept of sound money, and then they can start to get a bit more deeper into the industry. But Ampleforth is essentially, it changes the supply of money as the price. I'm sorry if I'm butchering it. I've got a basic understanding, but it changes the supply based upon pumps and dumps and the price going up. And the goal was to try and create some kind of stable monetary value, but it's volatile like crazy. Hasn't achieved that goal, but it's still an interesting experiment to see.
Yeah, sure. No, thanks for that. So we have another question. So this one's about DeFi. What do you feel about the hype of DeFi, and what's next for DeFi after borrowing, lending, and savings?
Do you want me to take that one again, or?
Anyone can take it.
Do you have an opinion on the DeFi side?
Sure, I can chip in here. So I see DeFi very much like ICOs. It's a little bit controversial, but DeFi there is definitely elements of a boom there. DeFi is definitely a buzzword for this year. There's some good projects out there, but I don't think all of them will survive in that sense. When we are looking at lending and some of these projects that are out there, I think it will normalize within next 12 to 24 months. It's sort of a very bold prediction, but I see the same signs there really that that were happening during the ICO times. It's probably the people that are early on a train that will benefit from that, and long term, the companies that are really doing a proper thing, that are building proper products, these are the ones that are going to survive. So I think there's going to be a lot of companies that will drop off the radar, and there will be few DeFi companies, products that will be there, that will become common names, like what we see in in terms of exchanges these days, or what we see in terms of, let's say, stable coins. So it's there's definitely a bit of a sort of a boom going on there. That's sort of my 2 cents.
Thanks, Gunnar. What about your view, Simon?
So DeFi stands for decentralized finance. I think it's great to see, but it's definitely buyer beware. If you're looking at investing in these DeFi products, my guess is that you probably don't have the technical capability to assess the risk of them. And so you need to take it with what it is, something that could blow up or could actually end up producing a yield better than you can get in the traditional financial markets. You really do need to be a coder at this stage to assess them, because they don't have the history. There's no history to kind of rely upon. 1 year of history in crypto is like the most you can get at this stage. And so really it's just buyer beware. I think it's great experimentation. I think if you can take some of your funds that you can afford to lose, then it's an interesting thing to look at, and the returns are really great. But the reason the returns are so great is because the risk is so high. The market dynamics have not changed in crypto. The rules are still the same. The higher the return, the higher the risk, and that's still, and that's certainly the case with DeFi. And I guarantee you, 99% of the people that have their funds locked up in DeFi have zero understanding of the actual risks involved in terms of what's actually under the hood in these products.
So Simon, this is quite interesting. So I can draw a parallel here what you were saying before. When we had traditional financial institutions basically taking in money from one side, lending it out on the other side. So with DeFi, would you say it's almost the same? Like there is no centralized bank doing that, but it's a smart contract doing that. So every time somebody is making a return, in a way, that's how the markets work. Somebody is also losing money, right? So when you have high yields, high returns, on the other side of the equation, somebody is probably actually taking those high losses and the high damage. Is that sort of a good analogy?
Yeah, I mean, it's kind of the traders versus the investors, and this has been this in traditional money. The investors, most people lose money trading. So I worked as a market maker on the trading floor. 90% of people are losing money at the expense of insiders, and it's the same in these markets. So the high yields are being generated by the investors that are holding long term at the expense of the traders that are over speculating in the market, creating taxable events, and just really gambling. And a big part of our industry is just full of these rampant speculators trying to jump into the next big thing, trying to find the next big shiny object in crypto. And from my observation, having been involved in this industry from the very beginning, the wealthiest people in this industry didn't mess with much of that stuff. They built a portfolio of equity in private companies. They invested in Bitcoin, and they took a percentage of that for rampant speculation. But most people are saying, well, I've missed Bitcoin. I've missed all this. I want to go straight into the riskiest thing, try and make as much money as I can. And then hopefully if that works out, but then most people just destroy their wealth that way. Unless you were in 2017 and it's like we're headed for the next bubble. Our industry is full of bubbles, pumps and dumps. But there's consistent things that happen as you get, you tend to reach these new highs in Bitcoin, and you tend to get these things which can pump harder or dump harder than Bitcoin, and that just sums up our industry really.
Yeah, there's a lot of exciting stuff going on there. I mean, within this industry, you do have. I mean, every time I talk to somebody that's more on the retail side, I always say, only play with the money that you're willing to lose. Basically, if you go into these very overhyped types of products, so that's definitely the sort of the message there. I can echo that, like the buyer beware. If you know what you're doing, then it's good. But it's something to always keep at the back of your head, I guess.
See, that's a tricky one as well, because I do often get conflicted. I know that there is massive risks in this industry, but at the same time, for me, in my map of the world, I see my money at a bank as the ultimate risk. It's subject to bail-ins. I'm very lucky if the bank lets me spend my money without me providing, an incredible amount of documentation. I wanted to, when I liquidated some Bitcoin to purchase a property, real estate, it took me 9 months to actually get the money out of the bank. In that time, I had to do source of funds, source of wealth. I had to go back to the genesis block of when I mined those Bitcoins, prove that they weren't the proceeds of crime. I had to go through 3 different banks, and it's just absolute nightmare. Now, most people don't experience this when you're dealing with smaller transactions, but when you start doing larger transactions, you realize how difficult it is. Not only that, it's devalued. And we're at some point going to hit the systemic risk events. The insurance doesn't cover it. Don't think that because you've got federal deposit insurance, it's actually insuring many times more than it can actually cover. So if they're relying upon only a few banks going down. If there's systemic risk events, then there's no way the insurance can cover those deposits. So for me, when people say to me, well, there's risks in Bitcoin, there are risks, it's different risks. You've got to understand what the risks you're trying to protect against are. But for me, when you ask me to buy dollars with my Bitcoin, it just seems like it's something that's too risky for me to do.
Simon, that was really interesting what you said. The scenario where you said where you sold a property and it was very difficult to get larger sums of money out of the banking system. Why do you think that is so?
Well, a couple of reasons. Firstly, I was completely transparent. So rather than trying to hide anything, I told them that I earned this money through gains in Bitcoin. And once they hear the big B word, it's got a lot better over time. It was virtually impossible before. But now you do have, crypto-friendly banks, and I actually do. I do have a relationship where I can buy and sell Bitcoin through my bank. But it took a long time to get there, to be able to be in that position. So it's just there's anti-money laundering has been a huge trend over the last, since 9/11. The requirements on financial institutions like BnkToTheFuture, like First Digital, like a bank, the requirements set upon us, they are really aggressive. And the fine for getting it wrong is, a big fine and prison sentence in some case. So you are driven to less risk-adverse things. And so if I'm trying to buy something through the banking system with the process of Bitcoin, how much is the bank going to make out of that? Well, virtually nothing. And yet they've got to do forensic investigations into the blockchain and hire experts. And so the profit-making incentive is just simply not there, relative to the risk that they might need to take in order to mitigate some of those risks, which is why you need institutions like First Digital, which is saying, well, let's just specialize in this intersection between digital assets and the legacy financial system, and be able to create custom solutions with a great understanding of the industry. So therefore we can make a business case and make it cost effective to really drive forward this intersection between digital assets and traditional fiat money, because it is a specialism. And traditional financial institutions, they may not be investing in that right now. So the easiest thing to do is just walk away.
Yep. So that was so following on from that question earlier about DeFi, about decentralized finance. So here we have centralized finance and the banking system, and then here you have a group of very smart people who are trying to build I suppose maybe replicate the financial system with code. do you see that, in the future, running in parallel? So you have the centralized financial system, and then you have this decentralized financial system. So now people actually have a choice of which, and you probably have some hybrid model as well, right? Where do you see that as potentially a future where all three systems kind of still exist and coexist?
So maybe I'll give a very general answer to that. Somebody asked me the very same question just recently. So this is going to be sort of like an analogy, and basically, we were discussing about the same thing. Incumbents versus some of these newer companies in the industry, and the analogy that I sort of came up with was that it's like a transition from horses and carriages to cars. Didn't happen overnight. So it wasn't that like one day the whole world decided that tomorrow we're not going to use horses anymore and carriages, and we're going to build highways and roads and all of that. So you need the infrastructure, you need the roads, you need something where the cars can drive. You need manufacturers to build those cars. So it's in my mind, it's going to be a gradual transition, and it requires a global mind shift. I wouldn't even dare to make a prediction how long it would take, but I think we're moving towards digital. The traditional side, like we come from traditional side, and we see the hurdles that are there, and it's a very rigid thing. So in my mind, it's going to be that the digital asset industry is going to build their own solutions, and it's going to be sort of evolutionary effect where you get survival of the fittest. The best companies will survive. The people will use that actually provide value, and it's going to be a transition. And I think when it's like an iPhone, right? So when Apple introduced an iPhone, they said it's a new type of a phone. It took some time for people to get used to the touch screens, to get used to all of these things. It wasn't like an overnight shift. And I think the traditional players, very much like you see traditional manufacturers like before, like phones and horses and carriages, they can either shift to the new version. It can be a gradual thing, or it can be adaptation of that technology. But it will be sort of a transformative shift over maybe next 10, I don't know, just wild guess, 10 to 15 years, I would say. And we will call it still the same. Like you would call your iPhone a phone. You can still make phone calls, but you can also do a bunch of other things. And maybe it does the phone calls in a better way. Maybe it doesn't use the traditional phone networks, like GSM and all of that. It uses the modern version of that. So I predict we see same kind of similar shift. We call it the same name. It's banking, whether it's going to be a fractional reserve model or whether it's going to be something different. That's for the future to sort of show us. But it's going to be a gradual shift. That's my guess, I guess.
Cool. Thanks, Gunnar. What about you, Simon?
Yeah, so I believe in yin and yang. I believe that there's going to be a booming regulated industry and a booming decentralized industry, and a hybrid in the middle that does the on and off ramp. So at BnkToTheFuture, when we're bringing investment opportunities to our investors, we're looking at those three different areas, and I want to be diversified across them all. So we started investing in highly regulated companies, whether it be the exchanges, companies like Coinbase and Kraken and various other companies that have to adhere to traditional regulations in order to deliver their service. We also bring opportunities to invest in decentralized finance. And I actually think the two are needed. There's a yin and yang effect here. One of the things that I was really excited about when Bitcoin started to grow and where it is today is that by giving people the opportunity to exit from the traditional financial system, we can actually build a better traditional financial system, because competition drives innovation. And we're seeing that right now with a lot of digital currencies, instant settlement, stablecoins, central bank digital currencies, JP Morgan coin, whatever it may be. You're seeing the legacy traditional financial system seeing this stuff that's happening out there and saying, hey, they want to eat our lunch, let's do it better. And I even forecast that I think we're going to see central bank digital currencies as the next bailout that actually is used to save the financial system during the next systemic risk event, where people will be able to swap their deposit to the bank for an app and a central bank digital currency. And then the central banks can just let the banks go bust. We don't need bail-ins, we don't need bailouts, but you're going to move to a form of money that is not very nice for your privacy, your freedom, your sovereignty. But thankfully, there's a competing financial system and the two can compete. So I'm looking for in the middle where you can transition from one to the other. Traditional institutions that are looking to actually get into this industry, and then the complete opposite end of the spectrum, which is the decentralized side. I think people need to be diversified across the both, and I think they're all going to boom.
Yeah, that's really interesting. No, that's cool. That leads us actually to the next question from Alexander again, which I'll put up. So it says, do you think banks will collapse eventually? A major event? So I think you partially answered that, Simon, in that last one, didn't you?
Yeah, I mean, no currency in history has ever survived, so we're going to see fiat currencies collapse. We're already starting to see them. They always are collapsing in some form or another. The world reserve currency will always change. The longest standing world reserve currency was the British pound, but that was really an outlier, But I expect to see a big monetary renegotiation ahead. I think the Federal Reserve has actually thrown everything that it has at this. And I think that the central banks are accumulating gold for a reason. And the reason is because you're going to get a seat at the table of an upcoming monetary renegotiation when we start to see systemic risk events. On my YouTube channel, I created a video called The Real Estate Market Crash and the Next 10 Steps. This was just before the pandemic. And I was releasing what I think will lead to the domino effect. But yes, certainly we're going to see banks requiring bailouts, banks exercising bail-ins, and people need to start thinking about how they're going to protect it. We don't call it this yet, but in 2011, I uploaded a video to YouTube. It's still on my YouTube channel, Simon Dixon. The title of that video was The Great Depression of 2020. I do think we are in the Great Depression of 2020, but we're not going to call it that until several years from now, once we actually analyze the figures and the stats.
Wow, that's cool. You mentioned something that was really interesting. So a lot of central banks are now collecting gold, right? Or they're accumulating gold. Do you see, one day, central banks hopefully accumulating Bitcoin because it's central bank agnostic, isn't it? It's something that's central bank agnostic, like gold. Do you see that happening?
Absolutely. If I were advising a central bank right now, I would take an asymmetric bet on Bitcoin. If I were Lebanon right now, I'd be rediverting some of my some of the funds to actually taking some of the electricity of the country, mining Bitcoin, and then announcing that they're using Bitcoin as a reserve asset alongside their gold reserves and any treasuries or dollars that they might have left after this. The effect that it can have on the price is a really big incentive for a central bank to actually be the first mover. From there, I think you can have countrywide FOMO, whereby the last to announce that they're holding Bitcoin as a reserve asset will obviously be the ones with the most power right now. But countries like Japan, superpower economies that have had very challenging financial systems, the inventors of quantitative easing, the central banks there, they've been positioning their regulations for this industry for like almost 8 years now. So they've got, a highly regulated digital currency industry. They're perfectly positioned. Some of their banks have been mining Bitcoin. The biggest bank in Japan has been mining Bitcoin for a long time, investing in all the startups in the industry. And so I certainly think that at some stage, I think it will be the countries with the most to lose first. And they see it as an opportunity because it's an asymmetric bet. If it's good for an individual with their savings, then it's good for a central bank too.
You just need one to start up that domino effect, don't you?
Yeah, absolutely. I mean, if Isle of Man had a central bank, I'd be advising the same. But they actually were the first country in the world to support Bitcoin. I spoke at their conference in 2014, and the Bank of England actually called them up and said, if you support this industry, we'll remove clearing to your financial system, because they actually depend upon another central bank. Now, if the European Central Bank does the same, I think you could see countries in Europe reigniting their own currencies, their own central banks, and holding Bitcoin as one of their reserve assets alongside gold treasuries and all the traditional assets as well. I think you're going to see some really, really crazy, shocking things in the years ahead. Nothing will surprise me. Most people will be caught off guard by it, but I think you're going to see some, really, really interesting things. We've seen it in events like this. The last Great Depression, you had the illegalization of gold, the confiscation of gold, in times like this, governments and central banks will do anything to maintain power try and drive some stability in their economies.
Cool. Gunnar, did you have something to say, Gunnar?
Yeah, no, I found it quite interesting. So like in Europe, I remember this was a few years ago. So I'm originally from Estonia, and I remember Estonia was trying to push their cryptocurrency a while back. And I remember EU responding to that there's only a single currency in Europe, which is the euro. So there's definitely a lot of resistance from the central banks and from sort of these central authorities to this right now. But again, this might change in the future. It's we're seeing a lot of turbulence in when it comes to traditional currencies. When we look at even euro in Europe, although it has been doing great in some sense, in terms of reducing friction between countries and all of that. But the question is this the best the best outcome or the best result? So yeah, very much agree with that. And but at this point there is still a lot of centralized resistance to digital assets, which I hope will change. And it's really, at the end of the day, it's also about adoption. So the more people start using it, the more governments have to listen, and sort of the more progressive I think regulations we're going to get ultimately.
Cool. I'm going to flash another question here from Yong Tan Yi. So this question says, any plans to include crypto USD deposit options for DAI, USDC, and PEX? I guess this is probably open for both Gunnar and Simon.
At one of our, we recently just started building some products with First Digital, and one of our first moves was actually to convert all of our dollar deposits to what we call it being backed by a basket of cryptocurrencies and dollars as well, as in dollar stable coins. So First Digital are involved in some stablecoin projects, so you can mint new stable coins backed by dollars held at First Digital. At BnkToTheFuture, what we wanted to do is we started to see all these different stable coins. It's really, really interesting. When we first started, it was all fear offboarding into equity and securities in this market. We created one of the first Bitcoin investment products in 2014 with Max Kaiser. We were paying out daily dividends. We were paying out thousands of Bitcoin dividends to all of our investors, and the same with Ethereum as well. And so really people were offboarding into fiat, and then we were giving them digital currency as returns as they were investing in these securities. But later on, when we actually started producing more and more returns for our investors, we give them the option to either withdraw them to the bank as dollars or withdraw it as a stable coin. And I'd say almost 97% of all of the fund transfers are now people are choosing stable coins over fiat money. When I went to China, it was literally when we were paying people, Tether was almost, I mean, I was in a niche community, but Tether was the only way to pay someone in China your WeChat Pay in the taxi, and Tether if you're doing a larger transaction with some of our business-to-business suppliers. The adoption of stablecoin has been pretty remarkable. And so at BnkToTheFuture, we need to integrate as many of those. And that's why we needed a partner like First Digital, because it wasn't going to cut the mustard with our traditional, banking partners. But First Digital is setting themselves up to be, on-ramps and off-ramps for all of these digital assets and do it in a responsible, regulated way through great legal structures. So it was really, that's why the beauty of this partnership, and hopefully First Digital got more plans there.
Cool. There's a follow-up question from Yongtan Yi. So for investors who subscribed, so for the initial BnkToTheFuture Series B offering or bought into the secondary SPV markets like Bitfinex, Kraken, Ripple, Circle, SPV, are these SPV tokenized? If yes, can investors withdraw these tokenized assets to their personal wallets through BnkToTheFuture or FTT portal?
That probably made zero sense to most people, but to me it makes a lot of sense. I don't know if I can do a quick screen share. I can show.
Yeah, sure.
I'm not sure if this is going to work. Let's try it. Is that going to allow me?
At the bottom, there's a share screen.
Yeah, I'm pressing that and it's looking for permission. Can you see my screen right now?
Remove Gunnar's. I think yet, not yet. Nope, nothing's come up yet. If you click on the share screen, and then
you can't see this right now. Screen, no. Okay.
Nope.
Let me try just one more time, and if not, then
yep, sure.
It doesn't look like that worked. Okay, no worries. Essentially, at BnkToTheFuture, so we do funding rounds for equity. So we've always been in this intersection between traditional equity assets, but we're doing it for financial technology companies with a real focus on Bitcoin and crypto companies. So the reason that we've been able over the last decade to get quite far with regulators is because really we're doing traditional securities, but the assets behind those, underlying those, are financial technology companies. Now, what I think the question was is, so we're doing a funding round at the moment. Since 2016, a lot of our investors have asked to be an investor in our company, BnkToTheFuture. So we launched a quick funding round, which ends next week, on the platform for any investors that want to join us. And because every deal that we put on BnkToTheFuture, we get essentially, if they exit in the future, we get a 5% beneficial interest. If they pay a dividend in the future, we get 5% of that. So because we've invested in over 100 different companies through the platform, we're a pretty diversified way of getting a growth to the entire history of the industry. But the question was, are we going to turn the equity into what I think they're calling a security token? At this stage, we think the security token market is too niche. We don't see too many benefits of doing that in the future. But if we ever wanted to, we have a secondary market already, so it doesn't need to be crypto related. With securities, you can't have bearer assets, so the benefits are not really there. So it's not like Bitcoin where you can own it. It still has to be registered. The companies want to know who owns it. But I do believe that there will be something coming out of the security token market in the future. And when that industry matures, we have the option of taking all of this equity that we hold and turning it into a security token once the use case is there. But at the moment, I just don't see the benefit at this stage because there's no liquidity, you can't own it, and it's just too early for that. We did do the security tokens that I like. It's not just taking equity and turning it into a token. It's doing something that you couldn't do. So we did the funding round for Bitfinex. It was in 2016. The company was trying to recover from a hack that would have taken it bankrupt. And instead, it issued a digital token, which was essentially they owed their customers all of this money because they got hacked. And they gave them a token saying, I promise to repay you $1. At BnkToTheFuture, we allowed them to convert that token, which was a debt token, into equity. And the exchange actually recovered. About $52 million got converted. And they actually recovered within a few weeks. And this was just before the 2017 bull market. And they ended up paying all of the returns that they made in the bull market out to their shareholders as dividends. And that was a really interesting use case. If you compare that to some other exchanges in our industry, like Mt. Gox, they went bankrupt like 7-8 years ago, and the creditors are still trying to receive their returns. Because they used a security token, this was all recovered within a couple of months, and it created one of the best investment opportunities on BnkToTheFuture. That's where I like to see security tokens used, doing something that wasn't possible with traditional finance just because you have this token element to it.
Wow. All right, so I think so it's 9:06 p.m. over here now, and we've probably reached the end of the show. Simon, thank you so much for coming on. Gunnar, once again, great to see you. Great to have you on. Any final words, gentlemen? Gunnar, you could probably go first.
I guess last time I said, our sort of key message to our clients and our partners is keep building great products. BnkToTheFuture is a good example of that. These are the types of products and clients that we believe in. But for today's message, I guess we just revamped our branding. So watch out for that. We have new logos, new website coming. A lot of exciting stuff. Check out our blogs, our news. If you want to hear more from us. I guess that's my message for today.
Thanks, Gunnar. And Simon.
Yeah, I just want to say, today is a really, really challenging time for so many people. People are getting financially destroyed, but at the same time, there's this niche market called the cryptocurrency market, which is creating some of the most interesting times. So while today is one of the craziest times in financial history, no matter how bad it gets, you are alive at one of the most exciting times in financial history. That is going to be a redistribution. Wealth is going to get destroyed. Wealth is going to get created. And you really do need to be on, see if you can get yourself on the right side of that. I'm not trying to push you into the crypto markets, but I think crypto is a responsible thing that should make up a risk part of everyone's portfolio. And it's irresponsible not to be hedging into this market. I'm not saying take all of your savings and start putting it into Bitcoin or anything crazy like that. But really, it is a redistribution, and there's no one really knows what's going to happen because everything that comes next is politics. And so really, you've got to be really prepared for many different outcomes. Some of the things that we're doing, I release regular content on my YouTube channel, Simon Dixon. I give a weekly commentary on what happened that week in the financial system. Those that want to invest in BnkToTheFuture is a way of investing in the industry. And then working with First Digital, we're looking forward to actually bringing our next generation of retirement products for people that want to diversify into this industry as well. So it is exciting times. And, at the end of the day, we are all speculators because even holding your money at a bank is a speculation. It's a speculation on the credit risk of the bank, the insurance of the companies insuring. Holding your money in a pension is a speculation on the traditional financial system. Holding your money on real estate is speculation that banks are going to continue to prop up the mortgage markets. So unfortunately, we're all driven to speculation. That's either going to be done for you or you're going to do it yourself. And I think people need to get on the right side of that.
All right. Thank you. And that's really great. That's a really great closing. Once again, gentlemen, thank you so much for coming on. Gunnar, thank you. Good to see you again. Simon,
thanks, Andrew.
Welcome. Hope to see you on again soon.
Okay. Thank you. Bye-bye.
Have a great night. Thank you.
Thank you, Aaron.
Join us again same time next week, guys. Thank you.
Thanks.
Bye.
Bye-bye.